All right, good evening, everybody. Drew here, aka Catching Rockets. I decided I'm going to start doing videos probably 3 to 4 times a week on setups I'm looking at for the following trading day. I will say in advance, this is not financial advice. This is going to be more of a trading journal for myself where I keep track of setups that I'm looking at for the next day. And then I can see how those trades play out. Right now, I'm just looking at futures, NQ, and ES. And I noticed something interesting here on NQ. I talk about this on my videos, so I'm not going to go into it in depth, but right here on NQ, we see the 80% rule play out. And what that is this here is your value area of volume profile. If you don't know what that means, I have videos on my YouTube channel that go over value area and volume profile and POCs. You'll find that information there. But basically, anytime a stock leaves this value area, and I'm not talking about this like two wicks or I'm sorry, two candles or some wicks. I'm talking about actually leaves it and bases for a second and comes back down into it. 80% chance that when you cross the top of the value area, you're going to go to the far side. So this is a quick, easy, repeatable trade you can do over and over again. And same thing for the inverse. If it leaves to the downside and crosses back over, you can take calls to the far side here. Anyway, just happened to notice that while I'm sitting here staring at NQ. Again, just watching the futures, seeing what's kind of happening for tomorrow's trading day. Same thing here. ES and NQ are both just kind of chopping sideways at the moment. Nothing exciting going on. So as far as what I'm looking at tomorrow, we'll start here with PFE. I'm looking at the week chart, PFE. This one here is going to take a little bit to play out, probably, a few days, possibly sometime next week. But on the 1 week chart here, we have a pretty good bull flag. It also is lining up really nicely with the top of my weekly clouds. If you're not familiar with the clouds, I'm not going to teach them in this video here, and there's really not much reason for me to teach them anyway. But basically, when you're inside of clouds, you're just going to chop sideways. If you went from this cloud to this cloud, the bottom of the weekly here would act as resistance, and you might see a rejection there. But once you get above, like the weekly top here, it's got just nothing but free space to go. There's nothing stopping it here, nothing holding it back. So it should have a pretty good run. Also the retests. So like you can see here, we've left the weekly top, come back, and this retest is a bigger move than the initial move. So this could possibly be another retest here, looking to take from the weekly top up. So my entry on this is going to be right around $57. That's where I'm looking to enter this trade. $57. I'll take calls to the upside. And then here you can see I also have my POCs plotted. 57.56, the break of might be a better entry, because this POC could very well act as resistance. And then above that, we can run to 58, 40-ish, and then from there 59.10. But I'm expecting a much bigger move than all of that. But we'll definitely see some resistance when we get to those POCs. AFRM here. We've got a pretty good ascending wedge going on here, or sorry, descending wedge. That's been downtrend since November. This isn't going to stop anytime soon. But what I'm looking at here is a couple of things. We're going back to the clouds. I think every single play actually that I'm looking at involves clouds. I guess for the purposes of this video, Um, so here on AFRM, I'm on the 1 hour chart. I'm actually looking for a retest of the 4 hour bottom here on my clouds, which you can see is at 71.18. If it retests this, I'm looking for a rejection back down. So I would play puts from 71.18 to the downside. Um, a lot of times I don't have a great example on the screen here. I mean, other than right here, like this, we broke below, we retest, we have a good move here. And that's what I'm looking for if we retest here. I might have already missed it because we have a retest here, but we didn't really have a big move afterwards. So I am hoping we just get a retest and more downside. It might just continue down and not give us that retest, but I'm not going to, I'm not looking to take risky plays. I'm looking for high quality setups. And, like I discuss in my other videos, if, if these particular plays don't play out, I'm not worried about it. During the trading day, I'll be looking for my normal technical analysis, bull flags, bear flags, head and shoulders, double bottoms, double tops, triple bottoms, triple tops, things of that nature. Looking for good setups where I can enter pennants, triangles, all that stuff. If this does come up at retest and doesn't reject here, and we go up above 72, we'll call it 72.60, I will take calls to the upside, and I'll be looking to get out of those here at this 4 hour mid, which is this squiggly line, and I'll call that $76. So 72.60 to $76 for calls. Rejection of 71.18, or we can call it 71.20. I'll take puts to the downside. Waste management, this one here is a little iffy. The spread on it is pretty ugly. Here, let me just show you. So if we look at waste management, for puts, my spread is $25, $30. Yeah. I'm having a hard time with math right now. $35. Yeah. Or $30. I don't know. Whatever. It doesn't matter. The spread's not as bad on these 152.5s, but the open interest is horrible. Only 64. So the only way I would consider taking this trade is the 155s. If this spread gets better, open interest isn't terrible. It's not great though. So what I'm thinking on those is I have a bear pennant here. I also have a gap down here, this green shaded area that needs to get filled. My monthly top is right here below this gap. Daily bottom is here at 156.20. So I'm expecting break to the downside, out of this bull pennant, bear pennant. And I'm hoping I'm going to fill the gap here and play this all the way down to the monthly top. So my safe entry on this is going to be 156.20. There's no POCs between here and the monthly top, so I've got just nothing but free space to go, and this gap should fill pretty quickly. So if this plays out, this should be a pretty good play for us. We're looking at taking it at 156.20 to the downside and getting out of the trade at about 154. I will say when I give you these ranges that are a few dollars or several dollars, if you have a smaller account and you're only taking one contract, you want to sell when you have 20 to 40% gains, and keep compounding those small gains. If you're doing 10 or 20 contracts and you can trim 9 to 18 contracts when you're up 40%, you can leave a runner to try to get this full movement from 156.20 all the way down to 154. Okay. All right, on to the next. This is Planet Fitness. This one, we're basically right here at the 4-hour bottom. I'm looking for that rejection retest off the 4-hour bottom, which we're going to call 86.78. Or you could round it to like 86.70. We'll take puts from there. And again, I'm looking for it to touch the bottom and go, which is actually like right around $87. I'm not looking for ripping straight down from here when the market opens. I won't be chasing any plays. So I want it to come up to like $87, have a rejection anywhere between here and 87 and start pulling down. When I cross below like 86.70, 86.80, I'll jump into puts here, and I'm looking to play all the way down to 84.40, we'll call it, at the one-day bottom, or I'm sorry, at the one-day top here. Inverse, if this curls up and we end up playing to the upside, if we get above 87, we'll call it 87.80, I'll hop in calls here. I'm looking to play up to $89.70. But again, trim, take your 40% profits, play smart, be safe. The last thing I'm really looking at doesn't really require a chart. Wednesday, Procter & Gamble is having earnings. This is going to be 100% Lotto play, but I'm looking to take, I'm looking to do a strangle on Procter & Gamble. So I'll probably be taking a 162.5 call and a 155 put. If you're not familiar with strangles, this might not be your jam. They can be pretty exciting. I'm not going to be looking to pay $1.41 for these. I'll probably, if I can't pick these up for like under 100 or like 90 cents, I'm not going to take them. But how this works is you buy both a call and a put that's out of the money in both directions. And when the earnings comes, if you have a big move to the upside or a big move to the downside, you'll lose all of your money for one direction, but for the other direction, you should make up what you lost and then some. I've done these before where I've had plays that have gone 2,000% overnight, or 200%, 500%, and that's after also calculating in those losses, I'm still making a 2,000% gain. Again, but this is strictly 100% a lottery play. The same as going to the gas station and buying a lottery ticket and scratching it off. This is not a high quality setup play where you're going to be successful 70% of the time, 80% of the time. These can completely just do nothing and chop sideways or have a small movement in one direction, and that small movement isn't enough to make up the cost of the lower side or the higher side, depending on which way it goes. Hopefully that makes sense, but this is really just all that I'm looking at tomorrow. My main thing, like I said, I'll probably just be looking at SPY, along with whatever other tickers I see that start moving, and just looking for bull flags, bear flags, depending on what the market's giving me, looking for breaks of consolidation, things that I talk about in my other videos. Anyway, that's going to be it for tonight. Pretty quick, short video. Hopefully this helps some people out in some way. Anyway, much love, everybody. Have a good night. See y'all later. Bye.